Morning, everyone.
Good morning.
If you would drop a chat in the chat box and let me know that you can hear me and see my video okay. Looking good. That's a bit of a stretch, isn't it, Ryan?
No.
You called me looking good. Welcome. Good to see you again. Been a long time. What was it, just a couple hours ago? Okay, give me a second here.
Good morning.
Good morning.
Good morning.
Good morning.
Okay, let me get you signed as a host, Pam. 1 second.
Okay.
Trying to find your name here. You got some folks in the, I got to sign you as a host first, right?
Yes, I can't do anything without that.
Okay. Okay, Pam, you're now co-host.
All right.
So there's several there waiting to get in. So while we're getting the rest of the folks checked in to the meeting here, we'll get started in just a couple minutes. Anybody have any questions or comments before we get started?
This is Rodney. I'm just going to stay off of video because I'm on a really slow connection and I don't want to cause it to, my sound to go.
Okay. No worries. Let me shut off this noise. Something's happening here. Okay. Good morning, everyone. I hope everybody is safe. I hope everybody is healthy. We, as you're well aware, I'm sure, Tarrant County, well, Texas just opened for business, right? And hopefully everybody's going to stay safe. Still, I'm sure a lot of people are hesitant with going out in public again. I know some of the reports I heard, things were pretty slow in restaurants and stuff. And I'm sure there's going to be a lot of hesitancy for a while before people are comfortable going back out in public. So regardless, people do have to work. People do have to buy and sell houses. And let me, Pam, if you would, go ahead and put everybody on mute. People still have to buy and sell houses, so I think we're still in good shape. We just we're going to be talking some about that in the future, but that's not the purpose of today's call. So I'm going to go ahead and share a screen here and bring up my presentation. Give me just 1 second. Can you see my screen okay? Okay. For all the new folks here, welcome to the West DFW REI Group Real Estate Investors Meeting to May. This is a first-time event for us via Zoom. We tried a couple other tools, and that didn't work out so well for us. So we've switched over to Zoom, which I think is a much better platform for what we do in the group. I want to start off with a couple of rules that we want to try and live by during the call. These calls are recorded and they'll be uploaded to the group members area within a couple days after the meeting. Okay? Please don't talk over others. One person at a time, please. Don't be rude to others during the call. Please mute yourself unless you are the one speaking, and everybody will get plenty of time if as needed. So just keep that in mind. Please put your questions in the chat box to your right, and we'll do our best to answer them all. If you would, please start your question off with the word question so that Pamela and I can spot them in the list of chat real easy. And start off with the word question and then say, you know, how do I, or what about this, or what about that, or something like that. So it's real obvious. That'll help us pick it out of the chat, because on this end, there's a lot when I'm trying to talk to all the attendees. So, okay. Please try not to be late for these calls. We plan to lock these calls. I don't know what time yet, since this is our first meeting on Zoom, but we plan on locking the meeting, which means that late attendees will not be able to get in after a certain amount of time. I'm going to do that to minimize the disruptions during the meeting for those that come early and participate in the meeting. So just kind of keep that in mind. Try to be on time as much as possible. Okay. All right. Without further ado, we're going to move on here. Welcome for those first timers. Welcome to the West DFW REI Group. We're a group of like-minded folks that meet, network, brainstorm, joint venture, partner on deals to try and help each other do more deals and be more successful. So it's a win-win for all of us. Okay. So this is kind of our motto: comes network, learn, and do more deals at the West DFW REI Group. Okay, a couple of housekeeping notes here before we get going. And for some reason, my screen just, there we go. For the best quality of audio and video, I recommend that you turn off any unnecessary programs or scanning programs, such as, you know, any virus scans or Skype, your email. Those things all take a lot of bandwidth and can impact the quality of your sound and audio. So just kind of keep that in mind. Wear a headset if possible. So a lot of times that'll help reduce noise. If you're hearing any noise from me, please let me know and I'll put my headset on. Typically on my MacBook here in the office, I do pretty good noise-wise. But that will help you eliminate distractions too. Please use the chat window to your right and let us know if you're having any problems with audio or video or anything, or have questions. Use that chat, please. And if we need to unmute you to talk, to answer the questions and stuff, then Pamela will do that for us. Okay. Otherwise, keep yourself on mute if you're not talking. Okay, sponsors. Here's a list of all of our sponsors. These folks are people that you can trust. For those of you that are new to the business, and for everybody, I'm sure you see on the news all the time where there's always some scams going on. Better Business Bureau reports a lot of this, where people will a storm will hit, all of a sudden the contractors and scammers, I should say, come out of the woodwork and start ripping people off. They'll write up estimates, they'll get a deposit and never to be seen again. Well, these people you don't have that problem with. These companies, these sponsors of the group are here to support you as investors and members of the West DFW REI Group. And we recommend that you come to our group page and go to the sponsors page and look for these folks' contact information and give them a call first. Let them try and help you first whenever you need this kind of help. So we're going to go through and we're going to do an introduction of each of those sponsors today. Amy with August REI, are you online? Unmute yourself, please, if you're here. Okay, so August REI is a third-party servicing company. They've been with us for years. I've used them for years. They are the ones that will collect your owner finance payments from your buyers and pay the underlying mortgage payment if it was a subject to deal, and then pay you hopefully a profit check each month. They also report to the credit bureaus. They report, or they submit the end of the year tax report for you, 1098 mortgage interest statements, and they also will do the first notice of default letter if your buyer happens to be in default. So it's a great service for $35 a month, and if you structure your note correctly, the buyer is going to pay that. So give them a call. There's Amy's information and her office number and her emails. Again, all this information's on our website, and also the presentation that you're seeing right now, that will be on the website as well, and it'll be in the members area for download. Okay, EOS Air is our heating and air conditioning company. Anyone online for EOS Air?
Yes, sir. There's two of us.
Okay, good morning, Dave.
How you doing?
Doing great. Go ahead and give us a little 1 to 2 minute introduction of who you are, what you do, and how you can help.
I can do it in less than that.
Oh, okay.
We are a veteran-owned and operated company, and we're investor and homeowner friendly. We service residential and commercial, and we're also a smaller company, so it's a little personalized, a little more personalized. We're not just, or you're not just a number to us. And also that keeps our overhead low, so our prices are reasonable. And here's a business card if you want to see one.
Cool. Well, that information's here on the screen too. And
Right.
whoops, something happened here. Sorry about that. Like I said, I'm still playing with trying to get used to all this, but there's all the contact information right there. And the one thing I wanted to do today too that's new, and we've never tried this before, but since we can't network before the meeting or after the meeting, I wanted to give everybody an opportunity to ask the sponsors 1 or 2 questions, and that serve as a little bit of a networking to make up for not being able to physically meet. So does anybody have a question for Dave this morning? Anything about heating and air conditioning? Anything at all? Okay. Well, thanks a lot, Dave.
Hey, no problem.
Okay, Robin with Bearcat Capital, are you on this morning?
Can you hear me?
Yes.
Can you hear me
good
now?
Morning.
There we go. Good morning, everybody. Sorry, I'm remote, so there's no picture of me this morning.
That's okay.
You can see from the page right here that I buy and sell real estate notes. I am not an attorney, and I just I can give you some advice based on my experience and what I'm looking for if you're trying to create a note or sell a note or anything like that. Some people have asked me, well, what do you mean by a note? It's a mortgage. In Texas, we refer to it as a mortgage. And sometimes you may have inherited something that a house maybe that that your parents or aunt or uncle or somebody had a sale and they couldn't get financing, so they ended up selling and carrying the paper themselves. So the previous owner was the bank, and that's what we refer to as a mortgage or a note. Is you're going to be the bank. I also have some experience with Airbnb, and I have some corporate housing. So my background has been real estate for 32 years, and so I've dabbled in a lot of different things. If I can help you in any way at all, don't hesitate just to pick up the phone and give me a call. And if I can't help you, maybe I can steer you to somebody who can. So anyway, there's my contact info, and I appreciate everybody getting together this morning.
Thank you very much, Robin. Good to have you, even if we couldn't see you. Okay. Dave Burdick with Dave Burdick Insurance. I know I saw Dave pop on there a minute ago. Good morning, Dave.
Good morning. Good morning to everyone. Glad you're here. Dave Burdick with Burdick Insurance. We do insurance for property investors. Whether you're doing buy and hold, subject twos, wraps, any of the real estate transactions, we can do the insurance competitively and correctly. So all we ask is an opportunity to compete for your business. And I'm assuming I don't have that screen up. I'm assuming my contact information is up there. You can also Google search for Burdick Insurance and we come right up. So
Cool.
Appreciate the opportunity to compete.
Dave, are you able to see your contact info on the bottom of the slide?
Yes.
It's there.
Yep, I see it.
Okay. I just wanted to make sure what you were seeing is what I
was
see.
looking at myself.
Okay. Everybody likes something different, right?
Yeah, right.
So Dave and I have been working together a long time on especially with the subject to stuff. How many years ago you think, Dave?
Oh, it's been 10 or 12 years.
It's been a while. So
Yeah.
By the way, I need to talk to you about an upcoming subject to class too. So
Oh, great. Yeah, I look forward to working with you on it.
okay. Thank you, Dave.
You bet.
Okay, Dusty with Hudgens Contractors. Are you there, Dusty? Okay, so maybe Dusty didn't get on there, but Hudgens Contractors is our roofing contractor of preference. They've been with us for several years now as sponsors. You see here from the slide that they provide free inspections. They have a ton of experience, and they will give you that inspection in a very timely fashion. And timing is critical when you're putting together an offer on a house. So get Dusty out there. He'll come out, meet with you, and get that written up for you. They've done several homes for me, and they've done several homes for other members in the group. So there's all their contact information there. So just reach out to Dusty Arnold, and he'll be happy to help you. Make sure, by the way, for everybody on here, when it comes to calling the sponsors, be sure you let them know that you're a member of the West DFW REI Group. That way you'll get the best deal that they have going. So, okay, moving on. Next one is Longhorn Investments with Ryan. Good morning, Ryan.
Good morning. How you doing, Tim?
Doing great, doing great.
So Longhorn Investments, we're a private lender, meaning that we lend based on the property, not just the borrower. So we don't do things like looking at W-2s or tax returns. We're going to lend just based off of that property. We do still pull a credit check, and we do make sure that you have some cash available. So we do look for you to have anywhere from $15,000 to $20,000 cash on hand. But we're one of the few lenders that will do 100% of cost. So when we're talking about cost, we're talking about your purchase and your repairs. Those are what a lot of people refer to as the hard costs. So we'll lend actually 100% of those costs to you. I know it says up to 75% of ARV. Because we're still using historic comps, which means comps over the last 6 to 12 months, we actually have lowered our loan to value right now to 65%. to make up for the fact that the market has taken a little bit of a dip. But we will still lend up to the 100% during this time. And if I had to guess, I'd say probably sometime in mid-June, maybe early July, we'll be back at that 75% level. It's just right now, while there's a little bit of uncertainty, we're just lending at the 75%. My contact information is on there. If you guys have any questions, feel free to reach out to me. But I'm also right now putting it into the chat, so you guys can also look there to see my contact info. And then something else that I'm going to be putting in the chat really quick is just an example of what recent closing looked like that we funded. So you can also, if you want to, open up that PDF that should be popping up in the chat in just a moment, just to see what our loans look like. This was a real deal that we closed in April on a property in the East Fort Worth area, kind of near Haltom City area. I don't know if anybody has any questions that they want to ask, but I'm more than willing to answer those.
Any questions for Ryan related to hard money lending? Ryan did a great class for the group a few months ago. I'm not sure if it's still on the downloads area of the members site, but it was a great class on how to kickstart your business using Ryan's services. So be sure you reach out to him for that type of service if you need it. Anybody have a question for Ryan?
Yeah, Ryan, this is Dave from AOS Air. I'm actually an investment agent too, so I am a realtor. I used to be a contractor, and I've got, a good grasp of the ARVs and so forth, and all the numbers and the margins and so forth and so on. But I had a stroke about 3 years ago, so that kind of ruined my life and ruined my credit. And I was wondering what your situation is as far as what kind of credit requirements you guys have.
So our credit requirements haven't changed, and that's because we have some debt covenants to both our investors. We have $85 million from individual investors throughout the state. And then we also have some lines of credit with banks. Sorry about that. So given that, we actually have some minimum requirements we have to access that $50 million line of credit we have with some banks. And that's to have 650 credit scores. We can sometimes get a little bit around that, but right now in this current market, we are sticking pretty tight to the 650, but we have been known to make exceptions down to the 630, where it's what we want to do is we want to see that the borrower has a history of paying back debt. So we will look at it as a individual basis. We do have to do a hard credit pull to verify that, but we only do one of those every year. So when we do one, it's good for a year, no matter how many properties you do during that year span.
Okay, sounds good. Thank you.
Yeah, no problem.
And Ryan, just for clarification for everybody, do you have a limit on how many loans somebody can borrow?
Sure. To start, again, I'm going to give kind of some basic things and then some things that are being adjusted for the current market. So typically when you're brand new to lending with us, we'll cap you at about 3 loans. And then once you've shown some history of paying back 1 or 2 of those, then we'll actually extend your limit all the way up to 5 loans. Right now in the current economy, though, we are limiting to 2 at a time.
Okay, thank you. All righty, moving on. Real Estate IQ. Good morning, Ryan, or Rodney, sorry.
Good morning. Well, here, I'll turn my video on and see if it works.
There you go.
So we're Real Estate IQ. We send you 45,000 plus motivated, well, they're not all motivated, plus sellers every month. And we have off-market lead lists that you can go from for divorces and pre-foreclosures, appointment of substitute trustee, code violations, tax liens, all kinds of them. There's 11 of them. We also have the product called Fast CMA, where you can create your ARVs on the fly in the field. You can do it from your phone. If you have mailer campaigns, you can use our county data finder to create your mailing list for your areas that you want to target. We also have a new community area where we have sponsors that are trusted, vendors, loan folks, all kinds of people out there. We're creating groups out there in the community so that you can have conversations back and forth. A lot of stuff going on right now. one of the better ways to work in this market is to sign up for our premium service, which has skip tracing already in the list when it comes to your inbox, and you can utilize email, cell phones, regular phones. Some of them even have nearest relatives, so you can potentially go contact the nearest relatives.
So, Rodney, can you tell them a little bit about what their special membership benefit is that they get when they join the West DFW REI Group?
Yes, when you join the West DFW Group, you will get 6 months of the deal analysis suite for free. Or is it $1? I think it's $1. Basically free. And that gives you the fast CMA so you can run your own comps, also a rehab estimator and a ROI analysis tool.
So for those of you that are brand new in the business and are not members of the group, joining the group, that tool alone makes it well worth it. There's a whole list of benefits, but that tool, the fact that you can pull your own MLS comps is worth it, but then you get the deal analysis and repair analysis tool as well. So that's a part of joining the group when you get that 6 months of free services. So thank you for that, Rodney.
You bet.
For those of you that are interested in Rodney's services with the premium services, be sure you use our group code. We have a code for you as a member of the group that you get that will give you a 25% discount for life. So make sure you reach out to Pamela in the chat and we'll get you that code so that you can have that savings. So, okay, did I do this by accident or yes? Okay. All right. So Ruth Ann, good morning. Are you on?
Good morning. Can you hear me?
I can. Good morning.
Great, great. Thank you. Most of you know that I'm a traditional lender. The things that I've always mentioned are the down payment assistance that I can get for folks, all different incomes. Right now, because of the stock market and what we've just been talking about, the state programs are very dangerous for us to do, so we're not doing those. But people think that you have to have a 640 credit score to be able to get a loan nowadays. We can sell direct to Fannie, Freddie, and Ginnie, and we are not depending on banks to buy our loans. They're the ones who are cutting back and not doing the lower credit score loans. So I can still do loans down to 580 FHA. I can still do the VA zero down, the USDA zero down, everything. So traditional lender, but we have all of those sources because we don't have to depend on correspondence, banks wanting to do business with correspondence. Also, we have our relationship with the bank, a bank, and I'm doing all kinds of creative things. Example, somebody wanted to buy a 519 property, had 2 houses paid for, 450 and 150 approximate value, but only 1,000 income because he just retired and didn't want to take his Social Security yet. Couldn't use the wife's income, which he was depending on, because her credit was really, really low. So our bank made him 100% loan, interest only, and took 2 of the properties as collateral, the new one and one of his. So how else could you get something like that done? Wouldn't happen.
Cool. Ruth Ann, what's the rate for somebody with a 580?
Oh, it's not much over, maybe, depending on the loan amount. You know, they don't like the little loan amounts, but every FHA loan, which will take 580, every FHA loan, no matter what your credit score, actually, if you get an FHA loan, you're going to pay points. You're going to pay an extra, I mean, you know, we don't quote an origination, so call it an origination fee, plus maybe another point or so, depending on the credit score. So all of the loans are coming with points now, almost every loan. I have a guy that is 679 score, and he wanted 3 1/4 interest and he had to pay 5 points to get it.
Wow. Okay. All righty. Anybody have a question for Ruth Ann? And I apologize, I didn't ask if anybody had a question for Rodney. Backing up for just a second. Did anyone have a question? I don't want to pass Rodney either. Okay. Thank you, Ruth Ann.
I had a question for Rodney.
Oh, okay. Hi, Lexi.
Hey, I'm trying to figure out how to do this too. Okay, Rod, I wanted to know which monthly service offers the skip tracing, portion. What
premium.
monthly service of the Real Estate IQ offers the skip tracing?
It's the premium service.
Premium? Okay,
Yeah.
thank you.
You bet.
Make sure you get your code, Lexi, before you go sign up, though.
Okay.
Reach out to Pam for that, because that'll give you a discount for life.
Oh, great. Thank you.
I think you liked discounts last time I talked to you.
Absolutely. I think we all do.
Okay, moving on here. Oscar, good morning. Are you on the line? Oscar, you there? Okay, Oscar works with Texas Bank Mortgage. They are the sponsor that provides our physical location that we hold our meetings in, and they provide our breakfast for us. Now, I haven't talked to him about how he can give us a virtual breakfast. I don't know if he'll do home delivery or not, but I'll have to talk to him about that. But anyhow, they are great sponsors of the group. You can see there the different services that they provide to members of the group. And there's all of Oscar's contact information and stuff in order to reach out to him and get more details. But with all the sponsors, for everybody listening, reach out to the sponsors and set up a phone call or take them out to lunch or breakfast. Of course, social distancing rules apply today. I'm not sure how you could drink a cup of coffee with a mask over your face. You might have to use a straw or something. But anyhow, go do some lunch once it's safe to go do that. But find out just how they can help you and tell them what you're looking for. So all these folks you can trust, and I kind of use my grandmother rule. Most of you heard this before, but my grandmother rule is, would you send your grandmother to these folks and still be able to sleep at night? And of course, with everybody we have on board, the answer is yes. So think about that. And, I'm going to ask you later on about any other sponsors. And that's kind of the rule. If you can send your grandmother to them and feel safe and sleep that night, then that's the kind of person we want in the group as a sponsor. So, okay, Simplified Title. Martin Garcia, good morning, sir.
Morning, Tim. Morning, group.
Welcome.
Thank you.
You want to say a quick intro and then we'll get into it more later?
Yeah, I'll get into it more later whenever I have the floor. Good to see 39 participants on the call. Tim and I were texting late last night and expected 38. So I think that helps out being virtual now. Some of you that probably saw me try to set up outside for the prime lighting. I had a spotty connection, so I moved back inside. So that's why I don't have my video on, but I hope that's okay.
That's fine.
Yeah, Simplified Title, why I mentioned the 39 participants, it's good to see a handful of folks that I have active deals with right now. So, hey, amid everything that's going on, I know people are buying, people are selling, and the market's still okay in a lot of respects. So hope you learned something out of this. Little brief background again before we get into it later on what material Tim's gonna give you is I'm an officer with the Texas Young Lawyers Association. I run the Tarrant County Association here locally, but the Texas Young Lawyers Association had published a primer just after our last recession about 10, 12 years ago. And I think that's a good, again, primer for what we're going to be talking about, the foreclosure process from default all the way to actually meeting me at the steps. I do foreclose often and post foreclosure. I think we might start seeing a lot of that coming up this year, next year. I'd say 2-3 years. So hope you learned something. Please be interactive. Please use the chat button. I know there's folks, again, on this call today that we've worked on deals like this before. I've been an acting trustee for Tim, for other people. Keep it interactive, learn something. Look forward to speaking with you all here shortly.
Thank you, sir. Appreciate it. Sorry about all the bouncing around on the slides here. Like I said, I'm still trying to get used to this. Some clicks work and some don't. So, okay, Think Realty. This is one of the huge benefits of being a member of the group, because with that membership, which is free, simply by clicking on this link, and also when you become a member, you get a sign up link in your welcome email. But all these different services plus others are the types of services that provide benefits and discounts in their products or services to you. For example, one of the biggest one is Sherwin-Williams. They provide up to 50% discount on various products, paint and flooring materials. The other one is, it still says E. Barnett, but this is a Home Depot store, and really today it's their Home Depot Pro Services, specialty services they call it, where they're actually advertising 15 to 20% cheaper than Home Depot. So you need to check them out when you become a member. I've been using them on a rehab that I just did, and they have a lot of benefits, you know, besides the cheap prices they deliver to vacant homes. The shipping or delivery is no cost, things like that. So what they don't do is building materials. They don't do 2x4s and drywall and stuff like that, paint. What they do is all the accessory type things, appliances, doorknobs, ceiling fans, things like that. So that's what their specialty is, and it's a great benefit as being a member of the group. So if you have any questions on that, reach out to me or just click the link and register. Okay, and their new service, they now have a pro purchase card, which is basically just, it's not a credit card, it's a purchase card. So you go in and use this card, all your charges go on your account, and then once a month you get billed to pay that off. So pretty cool. You can also get it for your company. So if you have somebody in your company that you have do the purchases for you, you can set limits on it. You can get them their own card. It's a pretty cool feature, and it doesn't cost you anything extra. So go check that out once you get registered. Okay, earlier I mentioned we needed more sponsors. Well, this is just some examples. These aren't the only ones, but we could use any number of these types of people in a group. Anybody that provides a service or a product that is beneficial to us as real estate investors. You know, tax folks, CPAs, carpet cleaning companies, landscape, locksmith, those kind of folks, rehabbers, you know, anybody that provides a service that's real estate related. Those are the kind of people that we would like to have in the group. So have them reach out to me, or you call me, be happy to talk to you about it and see if we can't get some additional sponsors in the group. Okay, see you at the courthouse steps, Martin Garcia. So Martin, I think you just share from your end, don't you? Share desktop?
I can, but I'm going back and forth quite a bit. So Tim, if you want to share the screen on the material that I sent you, let's do that so people can follow.
Okay.
And I think that'd be the best.
Give me just 1 second, please.
Sure.
You emailed it?
I did.
There it is. 1 second. Almost there. Okay, can everybody see that? Facing foreclosure?
Yep. You just want to go down to the table of contents, then we can get started like that. Obviously, if you're going to be running point there, I'll kind of dictate whenever we want to scroll down a little bit, but I'm going to stick with the table of contents there. Like you said earlier, everyone should get a copy of this. Either it can be emailed out right now if Pamela wants to do that, or after the presentation. Back to what I said earlier, this is a Texas Young Lawyers primer geared more towards the consumer, and you probably see that once you go through. But again, it's a good step-by-step of what we're going to be going over today. Reason why we wanted to talk about meeting me at the steps in the whole foreclosure process. Mentioned earlier, probably start seeing it again soon, in my opinion. This again came out after the last recession. There are a lot of misconceptions, so you're going to hear me define quite a bit of the terms and just go through the process step by step, line by line. Ironically, Tim and I set this up pre-COVID. I think we got on the calendar about January, and those of you that know other groups in town, like Robin Carriger, for instance, he asked me to present on the same. So it's not just something that folks like Tim and I think is going to be prevalent once again, but I know a lot of others have that on their radar. Again, use that chat, please. Like Tim said, say question, let me know. I'd like to make it as interactive as possible. To be very brutally honest, I'm over Zoom meetings. You know me, I like face-to-face. I like Oscar bringing us breakfast and having some coffee with everybody. But we got to do what we got to do for the time being. So, Tim, ready to get started?
I'm ready.
Let's do it. If you saw the email, guys, Tim had mentioned that I'm going to cover points as deed versus deed of trust. And I like to use acronyms, DOT versus mortgage, security instrument. And then towards the end, we're going to start talking due on sale and the actual process of foreclosing on a note, default, demand acceleration, foreclosure, and the actual steps. Why did I give him that first bullet point to begin with? And if Tim's cool with it, I want folks to answer questions using their microphone. Why did I start with deed versus deed of trust? Guys, quite frankly, there's a lot of folks who still are confused about what each instrument does, its purpose, and what it serves. So someone unmute themselves and tell me what a deed is.
Hey, Martin.
Hey.
Yeah, this is Tangaloa. Yeah, so the deed is the ownership of the real property, and deed of trust is a security instrument for the lender.
Yeah, very baseline there. Thanks for jumping in. Guys, the deed, and there are many deeds. I have another 1 hour continuing education just on types of deeds you can use in the state of Texas. Deed is a conveyance instrument. Tim's selling me a house. He's the grantor. I'm the grantee, and it's a deed. I'm going to ask him to give me a general warranty deed, the strongest one for a purchaser. But that's quite easily say that's a conveyance instrument. That is title of the property. I love when folks are at the closing table and see the deed. Tim knows, and a lot of folks that do business with us know I still use legal paper for the deed, and I tell folks, hey, this is title of the property, and they're looking at me weird and think that it's going to be something that looks like a car title, right? Still see that often. Let's move over to the deed of trust, because what I mostly see is confusion as to the deed of trust actually being titled to the property. And I think an easy way to explain the difference between those two is, if you have heard of it, or if this is your first time, let's talk about lien theory versus title theory. All right, someone pop in and tell me if Texas is a lien theory or title theory state.
Hey, Martin, if you would, just let me know when you want me to move the presentation forward.
You bet, we'll do. Well, I'm just going to tell you, it's a lien theory state, guys. All right. In lien theory states, like Texas, as you know, the owner of the house has title to the property. You bought it cash, of course you have title to the property, but if you used someone's money, like Ryan's or Ruth Ann's or whoever, you can still hold title to the property subject to the security interest, right? The deed of trust in most instances, or the lien that you grant to those who lent the money. All right. The deed of trust is not title to the property. It is a security interest or lien that is granted to that lender. Okay, and title theory states, which there's still several of them in the States about a decade ago, it's closer to 50-50. Title's not in your name if you're the purchaser, except notwithstanding cash buyers, all right? Until the title's not yours until full payment's made. So I want to make that distinction first and foremost. Hopefully folks have gleaned something from that, because I still see it all too often. So, Tim, let's scroll up a little bit. Down a little bit, types of foreclosures. You missed it. Sorry, guys. A little bit back up.
This is hard to move in PDF.
No, I understand. That's fine.
Keep going.
No, it's actually the top of the table of contents. What I wanted to talk about next is the types of foreclosures that we see right there. Anybody ever heard of these terms? Non-judicial foreclosure, judicial, or combination? If you have, talk to me. Yeah, I see a hand.
I'm not sure I've ever seen the combination before.
What I know is that certain loans have to go through judicial, like the notices and everything, like home equities, is it 736 or something code, and then they have to go through the courts, and then like some of them just go through the posting procedure, I guess non-judicial, and some loans have to go like HOAs and home equities, I think, go through the courts.
Yep, my resident expert there, and I knew that you were going to talk about judicial foreclosures first, because I know what types of properties you attack over there. Guys, that's a really good baseline explanation of what non-judicial and judicial foreclosure is. In this state, we are lucky, in my opinion, to be able to non-judicially foreclose without the need for the court's intervention. How can we non-judicially foreclose? Let's lay out the framework here. Robin talked about notes earlier. If you're borrowing any kind of money to make an acquisition, the lender's going to require that you sign a promissory note. And we talked about it several times already. How do you secure that loan? I use the deed of trust as a security instrument that grants the lender a security interest in the property, and then we record that deed of trust. So we're going to talk a lot about language, and I want the lenders, the private money, the hard money, the traditional lenders, to chime in on what kind of language is in their deed of trust, respectively, because that's what's going to dictate how the foreclosure process is affected and how we treat it on a case-by-case basis. So the deed of trust that I use allow us to foreclose, call a default according to certain terms, okay? Mentioned default was one of my bullet points whenever I first sent my outline to Tim. I get this question all the time. Martin, when can I call a default on my note? What's going to be my answer to that? Let me see your note and your deed of trust. Let me see your note and your security instrument, right? A lot of folks will contact me and say, well, I heard it's 120 days. Traditional lenders speak up there, because I know that it all depends on the institution, but a lot of deed of trust from traditional lenders or bigger banks don't allow a holder of a note to call a default before that 120. Is that necessarily a fact for everyone? No, no. You know, Ryan can chime in. I draw up a lot of notes with Tim's deals with other private money lenders, other hard money lenders. You're able to call a default fairly quickly sometimes.
Yeah, we don't normally call default a lot of time. I mean, we have less than a 2% default rate, but most of the time we actually take deed in lieu of foreclosure, where they'll just hand off the deed prior to us having to go to that point. In fact, I don't think in the last 2 years we've actually had to go to foreclosure.
Good, good. Speaks volumes to your background and ensuring that you have financially fit folks for it. But yeah, we're going to talk about deed and lieu's later as well. So thank you for that.
Martin, we do have a question here from Bill.
Okay.
Go ahead, Bill. Bill Barton, are you there?
There he is.
Go ahead, Bill. I got you unmuted.
Oh, okay. No, I was just responding before, Tim. I didn't have a question on this. Sorry.
I'm sorry. Okay.
Yeah, that's all right.
So Martin, from the traditional lender view, I started to chime in earlier, but I didn't think it was that important. Deed of trust, first of all, the way I describe that is to just the borrowers is, think of it, the difference between a deed and a deed of trust. Deed of trust, you trusted them, they didn't pay, they violated the trust, and that document spells out how we're going to go about foreclosure. But yes, traditional lenders, we give them all kinds of time and notices and everything. You have to have notices that you sign for in the mail before it can ever be foreclosed on. So there's a protection there for the borrower that there's lots of time and lots of notices, lots of time to get caught up before we pull the rug out from under them.
Absolutely, absolutely. And that's precisely why I wanted to talk on this topic, is what my big 3 steps are. And Tim, if you want to scroll on the table of contents, when you see demand and acceleration, to Ruth Ann's point, everyone has to, every note holder has to go right there. That'll work. Has to jump through hoops, go through steps, okay? And let's back up a little bit. Ruth Ann has a manner of describing those instruments to the borrowers at closing. I like that she brought up what the deed of trust stands for, because yeah, essentially it is called a deed of trust. I've already gone over how it's not titled to the property, but there's a trustee appointed to enforce the lender's rights should there be a default, right? Once there is a default, the lender calls on that trustee to then jump through those hoops, go through the steps. What I want everyone to be clear of that has to happen before you even meet me at the steps. I know a lot of you on this call have made that phone call first, whether I'm the trustee or you have another, you can always substitute. Those of you that work the foreclosure sheets know that substitute trustee filings are prevalent, happen often. It's an appointment from that note holder, the mortgagee, the lender, to allow someone to enforce their rights. And guys, each deed of trust should have not only the borrower's rights, who's the homeowner in this state, not only the lender's rights, but also what the trustee can do, right? Let's jump into that first step after you make that call, and we have a 10, 15-minute chat about how we're going to game plan on this foreclosure. We all have to send out the notice of default and intent to accelerate. That's the first touch, right? Borrower has to receive that at their last known address. A lot of you on this call know that I not only send it, that first notice, return receipt requested. Ruth Ann talked about borrowers having to sign. Absolutely. But also send it regular mail. Don't you think they're going to open their regular mail? Yeah. Because a lot of times I do have folks who will not open that certified mail. They're underwater. They're not wanting certified mail to them. They'll get returned back to me. but I know that they have notice at least, if it's their last known address, and I send it regular. So that's the first step. And I'm gonna read straight from the code. I didn't mention it earlier, but all of these steps are lined out in the Texas Property Code, Chapter 50, okay? Specifically, 51.002 talks about sale of real property under a contract lien. Well, what's contract lien? Well, the deed of trust is essentially a contract between the borrower and the lender, yeah? Right? You're granting the lender the security interest. 51.002 talks about a debtor in default under a deed of trust or other type of lien on real property, all right, has to be given written notice by certified mail, has to, the requirement, like Ruth Ann mentioned earlier, not just for lenders like her, but all, have to send certified mail stating that the debtor's in default under the terms of the deed of trust, all right? And how many days does the debtor have to cure the default after one is actually called? That's statutory, so that doesn't fluctuate. How many days?
Is it 21 days, 21 per the civil procedures code?
Close, you're a step ahead of me. 20 days, guys. The debtor has at least 20 days to cure the default before we jump onto the next step that Tim has right there on number 2 in the table of contents, right? I send a notice of default and intent to accelerate. Statutorily speaking, I'm at a standstill for 20 days. They have a 20-day cure period. And guess what? The entire calendar day on which the notice required by that section of the code, regardless of the time of day, a lot of people ask about 5 o'clock or what have you, that day is included in the 20 days. So keep that in mind. All right. And the entire calendar day on which the notice of sale is given is excluded. So 20 days have elapsed. You're sure about it. What's the next step? You send out the notice of sale and the actual acceleration. In Lexington, how many days does my notice of sale have to be posted up in the courthouse?
21 days. That's where the 21 days is.
There it is. All right, so let's jump into modern times right now, current times. I jumped into Tarrant County's foreclosure site, and guess what? They still have a message that says all tax and foreclosure / trustee sales are canceled until further notice. So you can't meet me at the steps on Cinco de Mayo on Tuesday that I know of, right?
Mm-hmm.
Probably not even June either. We'll see. So could I get in the courthouse? Say the foreclosure sale was going to happen on Tuesday, May 5th. I probably couldn't get in the courthouse throughout the month of April, right? I'm not going to talk about all of the orders that we have locally, statewide, nationally, what have you. But here locally, you couldn't get to the courthouse unless you had an emergency hearing. Why am I saying all this? That number 2 bullet point is a requirement. Not only do I have to send the acceleration of the mortgage, of the payment pursuant to the deed of trust, I have to send notice of the sale, and I have to go and post it at the courthouse bulletin board. Could I have done that last month? I don't know. Lots of unknowns here, guys. I wanted to point out one more thing on Tarrant. Yes, they have filings for May. If those can't happen, if the mortgage has already been accelerated properly, guess what? You can just go repost for June, should we be allowed to get on the steps in June on the 2nd. But I did see some folks already filing for September. I didn't see any August, but in my opinion, I think people are preparing for that and saying, okay, let's go ahead and stretch this out as much as possible and get ready for September. That's reality right now. I personally have about 2 or 3 in Tarrant that I'm working on and wanting to know when I can get in. We'll see. So after the 21 days elapse after sending the notice of sale and acceleration of the debt, what are we at, 41 days there? Now, a lot of you have heard me say, you cannot foreclose earlier than 41 days. There you go, right? Let's back up. A lot of times people say, hey, how long is it going to take me to foreclose on this? This person's behind. Well, not only am I going to say the 41, but what did I start off with? Hey, what does your instrument say? When can you actually call a default? Can you call one as soon as a payment is late? Potentially. How often have I seen different grace periods? You know, probably the quickest one is less than a month. You know, those 10 or 15-day grace periods on private money loans. Yeah. All things to consider when you're preparing to make that phone call to an attorney, to me, hey, how long do I have to foreclose on this? And let's stick with that for a little bit. I want everyone to be cognizant of these facts because these come from different benches that I've been in front of in different courts, not just in Tarrant. The phone call that I get that says, hey, Martin, these folks have been habitually behind the past year. They'll pay on the 1st, they'll pay on the 5th, they'll pay on the 15th, they'll pay on the 20th. What you got to keep in mind is what you acquiesce to is going to be a fact that probably doesn't work in your favor. And that's the honest truth from my experience in different courthouses. All right. So establish how you can call a default and, in my opinion, have a game plan to have your team in place to enforce that default, not, oh, okay, well, I got this on the 21st, cool. All right, maybe better luck next month. We'll see. Any questions thus far?
I have a question.
Please.
So with them having the ban on it, it's okay to give more than 21-day notice. So if you post it each month, then whenever they do open up the foreclosures, you're able to move forward if you post the notice each month. The notice.
You're picking up what I'm throwing down, if you will. So if you properly accelerated the note, you've already gone through bullet points 1 and 2 that Tim has on the screen right now. Mm-hmm. And even if you've posted for May and June, like you see in Tarrant's website, then all you have to do is repost. You don't have to re-accelerate. The note's already accelerated. You got to go repost, though, at least 21 days before the next first Tuesday. And you guys that know me, I don't like to make assumptions. Those of you that are a little bit newer to investing in the real estate, why we keep saying first Tuesday is statutorily, state law requires that foreclosure sales are held on the first Tuesday of the month. Which Tuesdays most recently? I know I've talked about this at this group within the last year because it changed about a year or 2 ago. Which Tuesdays are we prohibited from selling now? Does anybody remember?
Holidays?
Not just every holiday, 2 specifically.
July 4th?
Missing one? New Year's. There was actually a sale on July 4th. Someone help me out. I think in 18 maybe. There was.
Mm-hmm.
Yeah, sure. It was first Tuesday. A lot of people weren't at the steps like I usually see, but one was held. Tim, let's scroll down a little bit.
Yeah, Martin, before we do that, so just for clarification, on sub-bullet number 1, the notice of default, that first notice going out, just so everybody understands, that first notice is going to be based on what the deed of trust in the grace period says, right? Or no?
Not every time that specific, Tim. So the notice of default lines out what the default actually is based on the actual deed of trust. Does it go into specifics? No, not every time. Mine doesn't say, it just says, these are the payments that you haven't made. And pursuant to that deed of trust that those borrowers signed in favor of the lender, they now have, the clock's ticking on the 20 days. So it doesn't specifically say, this is the default period that's outlined in your note and deed of trust.
So again, I'm just trying to make sure all the new folks understand when their borrower misses that payment, when do they send that first notice?
If there's a default call and someone calls me and I'm sure that we are able to call a default, grace period's over, then that day I'll send a default and the 20 days start rolling.
Okay.
Hey, Martin.
Yes.
So these two notices, I thought I've never been through this, but is that something you have to go to the court to get, for example, the demand on that second notice, or is that something your attorney, the foreclosure attorney handles?
The latter.
Oh, okay. So there's no need to go through the court. It's just a timetable.
Correct. And that's why I wanted to start with non-judicial as opposed to judicial, right? It is just a timetable. It is a statutory measure that you have to provide certain notices to give someone and put them on notice that you intend to foreclose. It is the timetable, no need for court intervention on one or two.
So the only reason for the
attorney actually having to post that notice at the courthouse, the second one.
Okay. So the only reason for the delay right now is because of the whole virus deal.
That's right. That's right. If you've
and that's from a federal level.
Yeah, if you've been to the Tarrant County cell, there are hundreds of people out there. What would that do right now? Violate every order that every local jurisdiction and the state has issued, right? I know we're in phase 1 right now. Tim said we're back in business, gradually, but it's still at limited capacity at restaurants, but gatherings are still limited. How can the county judge in any county really in good faith allow for sales? Well, there might be some remote counties. I have been remote counties up north and northwest that there might be 10 to 15 people at the cell, but definitely not here.
I have a question. Under what, are you done? Oh, I'm sorry.
Please go ahead. Go ahead.
Under this is my nerd talk here. Under what code governs non-judicial foreclosure, or is there too many, or is there several that governs the process here?
Property Code Section 50. The notices 1 and 2 are in Property Code Section 51.
In section. Thank you.
Mm-hmm, absolutely.
Okay. Ready to move on?
Yep.
Tell me when to stop.
Good right there. I'm going to breeze by these and then we'll go back to the actual sell process because I kind of wanted to make it a field trip kind of environment to where you know what I do when I go to the steps. Those of you that haven't been a trustee or appoint one and never actually go see said trustee sell. So everything's been met statutorily speaking. You're ready for the first Tuesday. All right. Who knows what times the sales can happen on said first Tuesdays?
10 to 4?
Yep. That same code I referenced with you says if you're selling property under a power of sale on that deed of trust or other lien at a public auction, it must be between 10 and 4. Okay, on the first Tuesday of the month, 10 and 4. I've sold as early as 10 o'clock and I've gone as late as 3 o'clock to sell. It's a little bit, it was very dispersed by then, but you have the right to sell between 10 and 4. one caveat that we'll get back to that's lower in the table of contents, keep in mind that bankruptcy courts accept filings at 9 o'clock in the morning. So keep that in mind as we move on. I won't get in the weeds on distribution of proceeds. It's pretty self-explanatory if you buy and the title isn't messy. But there are other avenues for a lender to go after a debtor, because if the lender sells and not for the reserve price, then there are consequences for said debtors that aren't released of the obligation of the debt. So that's what I want you to know there. Eviction.
Oh, I got a question. In this market with the accelerated values, it might be one where there's excess. Is there excess proceeds on mortgages? And if so, does that money go back to the debtor that was foreclosed on?
Potentially. And that's why I said we're going to breeze by these, because we are talking about deficiency.
Oh, okay.
Yeah. Mm-hmm. So, guys, other baseline terms that I want you to be aware of, and these are in TREC 1 to 4 family residential contracts. These are on most any contracts for the sale of real estate. I'm still on the eviction point. You might hold title to property, but possession is a whole different animal, right? I finish my sale, I conclude, and I'll go over that script later. I conclude the sale, someone buys it, great. Or in the alternative, my reserve isn't met and I can reacquire the property on behalf of the lender. I'm done, right? Well, that's the second question. Who has possession of the property? Is the debtor who just got foreclosed still there? Is someone renting the property? These are things we have to think about. Regardless of who is possessing the property, if someone is, you then have a next step. And I was asked earlier, which steps do you need court intervention on? Well, you sure need it for possession, okay? You're at the justice of the peace level on possession, and that's the eviction. What's the eviction suit called in this state?
It's a writ? Is it a writ?
That's towards the end of the process. It's called an action forcible detainer. It's a forcible detainer suit. That's your petition, right? We finish, a couple days later, let the dust settle, you call me, hey Martin, someone's still in the house. I got title though. Can I just go in there? No. It's gotta be peaceable possession, according to the code too. So you file a forcible detainer action. How many days notice do you have to give someone in a residential scenario to vacate the property because someone else now has title to the property? 3 days. 3 days legally speaking. If you've hired me to do it, I might advise 10 days because then I can attach attorney's fees to the judgment when we're victorious, right? 3 or 10 days elapse, then you try to get on that justice of the peace court's docket and you have your hearing. Prove up the facts. I mentioned being victorious. You're looking for a judgment. The judge to say, okay, I know you have title of the property. Now I'm granting you possession. And once you have that judgment, what Lexington said, the court's going to then, after you ask for it, authorize a writ of execution. So you can then peaceably repossess the property. And these vary by jurisdictions too. Many of them that I've encountered, once you have a writ of possession and you're ready to execute it, you can call, again, with, depending on the varying jurisdictions, call the constable's office and initiate that. That's where you can call your locksmiths, change locks, all peaceably. Gone are the days, like I was referencing, where you can just put everything on the curb. I know a lot of jurisdictions say, all right, you have to get a pod ready and go put contents there if that's a scenario that you're running into. Let me add another element here. Tim asked me recently, so what if it's a vacant property? What can you do? Any ideas?
I have some.
Yeah, I'm sure. Pamela, mute Tim.
Since I just went through that.
Yeah, what do I keep saying? Code says it's got to be peaceable, right? You can't forcibly take possession. Well, guys, if it's vacant, then why don't you go ahead and get your locksmiths over there? There's no need for a writ of possession at that time. If possession is not in question and you have title of the property, go and retake it. Right? Squatters are a different animal. I'm talking about someone who had previously possessed the property and resided in the property, whether it be the debtor that was foreclosed on or someone in a lease scenario.
You want me to tell them the full story on this scenario, Martin?
Please, go ahead.
So this was a rental property in my IRA, and she's been a problem child from day one. And her lease was due to expire the end of March. She talked me into a couple more months for school. As soon as I agreed to let them stay through school, she missed the March payment. And it went downhill very quickly from there. I went and I filed the foreclosure, had nothing to do with COVID-19. And we already had an eviction court date when COVID hit, and then all the evictions got canceled. And I was waiting, still trying to get a hold of her to get paid, because she'd always come through before. And I thought, she's just smiling, you know, living there for free right now, not paying rent because of COVID-19. Well, as it turns out, she abandoned the house. And that was part of the conversation I had with Martin was, you know, it's been a long time since I had a problem with a rental, a tenant like this, and especially abandoning the house. And when I went over there, you know, I took my little GFCI detector and plugged it into the front porch outlet. There's no power in the house. The next step was I noticed that there was a blind open in the front of the house. I went and peeked in the blind. There's no signs of any of the tenant's belongings in that house. So that gave me a pretty good clue. And then I called Martin. He confirmed it, that I could do a friendly repossession of that house. And I went and started checking doors. She changed the lock, so my key didn't fit the front door, but I was lucky. I went around to the back, and she had left the back door unlocked. So I went in, I changed the deadbolts. I got a locksmith over and had them rekey everything a couple days later, and got power turned back on it and all that stuff. But the fun part was, I'm just joking, the laundry room faucets didn't shut off right. So she goes out to the street and turns off the water to try and, you know, undo the washer faucet hose. And she didn't turn the water line off all the way. So that house sat there for several days. We don't know, but we think it was about 2 weeks with the water dripping in the house. And she just left, didn't bother to tell me or anything. So now I got all this water damage and stuff in this house because of that. So anyhow, I have possession. And then I heard the other day that Tarrant County extended evictions indefinitely. So I'm saying to myself, thank you for abandoning my house and let me have it back, because otherwise she'd be living in there for free and I wouldn't be doing any work to it. So Anyhow,
Yeah, that's right. That's right.
so thank you for your help, Martin.
Yeah, of course. And on that note, yeah, that just like trustee sales have in this county, and most, in my opinion, been stalled because of COVID-19. So have local orders and with respect to forcible detainer actions and evictions. So if possession is not an issue, yeah, lucky day. That's the fun part, in my opinion, if you're the enforcer.
Martin, can I give you another scenario there that you can guide everybody on? What if I would have gone in that back door and she would have left a bunch of, significant items like furniture and anything of value in there? What would my next step have been?
Going back to that word peaceably, I know you've heard me say that quite a bit, not just on today's call, but in the past. So my take on a scenario like that is, again, I like the word that you used, and that's in the code too, abandonment. There's a process for abandoned property. So for a scenario like this, what would be appropriate is sending a letter to the last known address of that person who had possession of the property and saying, your property has been moved to this facility. Now you start thinking, oh, this is costing me. Well, in my opinion, it's the right thing to do according to abandonment rules and regulations. And you let them know where it's going to be and for how long. A pod, like I mentioned earlier, perhaps a storage facility, because then there are rules too when property is in, a storage facility. So if you know they're of value, and if you know that you might have an issue later down the road, hey, I left this. Well, what I'm getting at is you don't want to be in a fight with respect to something that might have been unintentionally left behind. If you have all indications that it's been abandoned, a little bit easier. You can probably even keep it on site. Just be specific in said letter that's sent after the fact. Maybe like in a garage or a shed on site.
When I lock or take and secure that property, am I required to give her notice about how to contact me for access?
Not for access to the property, but to contact you to arrange delivery of personality, right? Personal items.
Okay.
Yeah.
By her walking away and turning off water and electric, does that legally say she's given up all rights to the property in accordance with the lease?
What am I going to say there, guys? Hey, let me see your lease first. Even if you use a promulgated form, and forms available to folks who are agents or part of TAR, I still want to see the lease. I want to see what the lease says with respect to utilities and how you've breached or abandoned potentially, because the lease is going to dictate. Everyone's heard of the four corners rule, right? What's in the four corners of that instrument? Because it'll at least spell out which code you're subject to or which area of the law you're subject to with respect to, all right, you've abandoned the property and breaches again. You are obligated to maintain the quality, at least of the property and utilities on. So yeah, those are facts in your favor.
Okay, thank you.
There's deficiency language on that bullet point number 6 down below with respect to bids that I mentioned earlier that come in a little bit low and there's still debt that the lender potentially can go after. Don't want to spend a lot of time on that, but want to let you know and invite you to read that down below in the body of the primer. No right of redemption for non-judicial foreclosure. I don't get that question often, but I still do hear it. Well, can this property be redeemed? So what's the rule here in this state? Anybody run into that?
I have not.
Yeah.
No redemption in the state of Texas.
That's it. Doctor, good to hear from you.
Thank you.
No redemption here, right? On non-judicial foreclosure. We're not going to talk Lexington's favorite tax lien foreclosures today, but there are two provisions on redeeming pursuant to a tax sale, and it depends on whether or not it's a homestead or not. Anybody know those timelines there? If
It's 2 years on homesteaded property and it's 6 months on non-homestead.
that's right.
But the rules are getting real stringent on what's homestead now. So you have to prove it. And if it's a single family, they kind of say it's a homestead regardless.
Sounds like you have experience there.
Just a little bit.
A little bit. That's exactly it. And to that point, you know, I said dispelling a lot of theories and or misinformation. You have to prove with evidence, facts, that it's a homestead. And yes, those rules are getting stringent, as she said. A homestead exemption on a property is one fact. It's not a indicator that it is indeed a homestead property. Because what if that exemption stayed on that applied to someone else that's occupying or possessing the property, right? Not going to get in the weeds there, but it has to be established whether or not it's a homestead. So yes, the only type of redemption in the code is with respect to tax foreclosures, which we weren't covering today, non-judicial foreclosures, no redemption. So in this primer, again, from the last recession, we had 3 different bullet points on how to avoid, see loan mods. If any of my lenders want to, traditional lenders want to chime in on loan mods, I have a commentary there on the legal end. Ryan mentioned deed in lieu of foreclosure. And I mentioned earlier, and I said I'd get back to it, bankruptcy, right? So let's just start with loan mod, alternative payment plan. I won't get into the requirements of loan mod, I'll invite the lenders to, but from the legal and title end, what I see, and I'm seeing this on the back end of loan mods and alternative payment plans that were established in 08, 09, 10. Folks, when people were underwater on their mortgage and pursuant to government programs, loan mods were available, people didn't understand that they were adding liens to their property. What does that mean? So there was a deed of trust securing the loan on the property when said borrower acquired, but when said borrower applied for and received a loan modification, guess what? Borrower signed more security instruments. And most of them were in favor of housing and urban development. I see those, and those affect title of the property. And when they get to the closing table, hopefully not to the closing table, but when they open escrow and are attempting to sell collateral, a house, an asset, whatever it may be, and they'll tell title, well, I'm only paying Wells Fargo. I only have one mortgage on the property. Oh, well, that's when now you guys have the tools and eyes to catch during your due diligence and research of title or looking at a commitment. Oh, there's a modification instrument. Most of the time when I find these, I don't see that debt rolled into the first lien. So it's effectively a second that encumbers title of the property.
Martin, one time I had a buyer or a owner who was wanting to refinance their house, and she had been in forbearance a few years earlier, and she no longer had an FHA loan. When we went ahead to try to do an FHA refi, we got to checking, and it was now a conventional loan. She didn't even know.
Yep. And that's the key phrase that I was looking for from the lending perspective. She didn't know. And most folks don't know. There are borrowers that find some relief, whether it be forbearance or not, like Ruth Ann said, sign a loan mod, and I wish I would have been a fly on the wall on how these tools or how these modifications were presented. Because yeah, you're right, they didn't know. And it comes time to, Tim's buying an asset, or someone's selling Tim, someone's selling Tim an asset in this scenario. Oh, it might not make sense for the numbers that he had projected, right? Deed in lieu and foreclosure, Ryan mentioned it earlier, always a tool. And I skipped over that intentionally earlier, but when I'm sending out my notices 1 and 2, I'll talk to my private lenders and I'll tell them, hey, this is an option on our approach when we're talking to the debtors. You don't always want to go full throttle. It is a case-by-case basis. And if you have any indication that borrower is willing to sign a deed in lieu of foreclosure, then go ahead and offer it at letter number 1, right? Notice of default and intent to accelerate. You haven't accelerated yet, but hey, Mr. Borrower, giving you an option to deed the house back to me. I've been listening. That's title of the property, guys, not possession. So you'll have that issue too if said borrower doesn't want to relinquish possession after signing a deed in lieu.
And Martin, right now with all this forbearance, the television telling everybody, oh, you can go into forbearance. You don't have to make your payments during this time. We're gonna see that same thing now, aren't we? Because again, those payments are being added onto the back or divided out more per month over fewer months in the future. But this is going to end up just like any other modification or forbearance. I think people are on forbearance right now. They call me and want to refinance. I cannot refinance a loan that payments are not presently being made on.
Great point. Ran into that recently too. I like the words there. I like the thoughts, and I'm going to echo that. Whether it be not knowing, again, what the forbearance entails, I agree with you. Forbearance is exactly what it stands for, and are the payments that aren't going to be collected for the next 3 months going to be enforced after the forbearance period or added to the back of the loan, if you will? Either way, Ruth Ann's right. All right, I'm just going to go refinance because I'm cash flowing right now. I don't have to pay the next 3 months worth of mortgage. Well, no lender's going to refi that without proof of payments being current. Great point.
I have a question.
Uh-huh.
When you accept a deed in lieu, are you accepting other title encumbrances that may have happened from the time of the origination up to the time they give the instrument back? I mean, give the property back?
So let me clarify. Are you saying accept with an A or E? Accept.
I don't know.
It's a valid follow-up question because I like where your head's at, because I do and will keep encountering deeds in lieu. So on the title perspective, I am going to look at all encumbrances prior to, because guys, always remember that title insurance is backwards looking insurance. I'm looking at the history of the property, hopefully back to its sovereignty, back as early as records were made for that property. So I am going to look at encumbrances. What I wanted to mention, and Ryan can chime in too, is some deeds in lieu, again, guys, just give title back to the property, right? Say we're having a sale on Cinco de Mayo next week. On May 4th, debtor finally tells note holder, lender, Okay, you know, I want to, and this happens all the time, last minute, those 41 days plus elapse so quickly and you won't hear from folks for the most part. All right, May 4th, I'll sign that deed in lieu. Well, what do those four corners say too? What does that deed in lieu actually grant or forgive? Some deeds in lieu do not effectively, with an E, release the lien that you're getting title back for, right?
Mhm.
So on the title perspective, absolutely, I'm going to pull all those unreleased debts and liens. And it might not just be the loan that was going to be foreclosed. So there's some cleanup work to ensure a property after a deed in lieu has been signed, executed, and recorded, and title has changed hands.
Okay, because they could have encumbered it some more during their ownership of it, right?
Okay.
Okay.
Sure.
There
Gotcha.
could also be
Thank you.
personal guarantees signed that's outside of just the property that they could still be responsible for. We don't exercise those when we foreclose, when we take the deed in lieu of foreclosure. At that point, we don't report it to the credit agency. We don't even report late payments. We just take the property back quick and painless. But we basically forgive any outstanding, assuming we do require that like property taxes are current. We won't make them pay them a proration for the current year, but we make sure that prior year's property taxes are current, and kind of go through just basic stuff.
I do that same thing with my owner finance notes is if I can, if the buyer is willing to do a deed in lieu, then I just forgive all that, just make sure taxes are current. So Martin, we have a question from Robin.
Mm-hmm.
Robin, go ahead and unmute yourself, please.
Well, I was just going to comment that, yeah, I'm agreeing with everything Martin's saying, of course. But my experience is if you're looking at maybe trying to do a subject to or taking some property back or something like that, it's well worth it to go ahead and spend the money and have a full title search run, you know, and find out what's been going on because I've done deed in lieu, but I would never do one until I've run that title search to make sure because there's some things on there that will stay with the borrower, but there are things that aren't that you may have to get cleared, and it can be a real time-consuming issue. And the other thing I was going to mention was when you're going back talking about loan modifications and forbearance and all that, you have to remember that it doesn't make any difference if you're buying a house from a borrower who has a $100,000 value on that house or it's a $500,000 value on that house because most people, if they're not in this business like everybody on this call, they don't understand any of this. And I can guarantee you that that lender didn't tell them everything they should know. And I don't think a lot of times that they're not trying to, you know, hide things, but the borrower is talking to a customer service rep who makes $12 an hour. And they don't understand it. You know, they just know how to open up the book and go through the questions, you know, like technical support does. So you're not going to get all your answers that way. So just be very careful. Call your attorney, run your title report before you step off into something and you're not really sure what you're getting into.
That's good advice, and that's advice that I'd give anybody calling me in this scenario too. It's the due diligence, guys. You want to know the state of title from when this debtor borrower acquired the property to when you're going to take title.
Okay, and one more comment, because I brought that up because sometimes it might be best to go to the foreclosure to wipe out the other encumbrances instead of taking a deed in lieu if it's too dirtied up, right?
And it depend on what encumbrances can be quote unquote wiped out based on lien priority. Yes. Yeah. So again, case by case, you're going to want to measure the success rate of a deed in lieu if you've already done your diligence and know what the state of title is, or actually foreclosing on the loan and giving proper notices as the code suggests. And yeah, to your point, some inferior liens may no longer be enforceable, especially as to the property. One last bullet point there before we'll end with the actual foreclosure transcript. If we were doing this in person, I would have had us act like we were on the steps, but we'll make do today. What's one of the resources that debtor borrowers have to stop the whole process? It is the bankruptcy. That's why I mentioned earlier, sales start at 10 o'clock. Bankruptcy courts accept bankruptcy petitions, applications when they open at 9. Has that happened to me? Absolutely. I've sold a property and had to go back and rescind the trustee sale because I didn't get a fax or a notification that the debtor had filed for bankruptcy until after I had conducted the sale, gone to the county clerk, filed my trustee's deed, done and done. Tim's heard me say this one before, and I'm pretty sure other people in the group have too. The bankruptcy courts can hold these assets up for quite some time. And in my personal experience, I've had one asset held up for about 3.5 years in terms of my client initiating or telling me, all right, Martin, trustee, initiate foreclosure proceedings, and I'm halted by the bankruptcy process. I won't get in the weeds with that either, because that's another lengthy discussion, but it is that protection for the debtor borrower in the foreclosure scenario. Abuse is one thing that I have seen. Guys, it's a protection, temporary, and especially in the Chapter 13 sense, a restructuring. But once, like anything, it's abused, then facts are back in the favor of the lender trying to enforce. But point I'm getting at is it could take some time.
Martin, is there any limitation as to how many times somebody can file a Chapter 13? Reason I ask is I have a property that I bought subject to probably back in the mid 2000s. I rented it, I owner financed it, I took it back, I rehabbed it and retailed it, and I had a buyer file bankruptcy on me that I beat, got possession of the house, and I still receive bankruptcy attorney notifications today of them still trying to file bankruptcy on another property. I mean, I think they filed like 4 or 5 times. Mm-hmm. Mm-hmm. And they know the legal system. They keep playing it, dragging it out. And, the only person that wins, I think, in that scenario is the attorney, because he's the one getting paid. But the lenders, I mean, I didn't make a thing. He cost me a lot of money.
Yeah, several good points there that I'll respond to. There are a number of bankruptcies that you're allowed. I don't know of a number there. That is a federal jurisdiction, guys. When I run into that scenario, I pass my clients off to someone who is in that realm. They deserve an expert in that federal jurisdiction, bankruptcy jurisdiction. Yes, I have seen abusers like that. Then it's up to the bankruptcy courts and the bankruptcy trustees to do their own diligence on these borrowers and see, well, what's going on here? Oh, he or she's filed X amount of times. Guess what can also happen? Say it's a husband and wife. Maybe he files first, maybe the first 2 times, and then she files after the fact.
Yeah, and that's what they were doing.
Yeah, what if another house occupant attempts to do the same? Well, I try to get a good bankruptcy attorney on my side to tag team the issues with my client, because there are protections for lenders, creditors, and secured holders in the bankruptcy courts and in the bankruptcy code from abuse of that system. Because I have seen folks who do abuse it know their way in and around and end up living in properties for free until the bankruptcies finally, bankruptcy courts allow the stay to be lifted and to the foreclosure to happen regardless of any other action that's attempted by the debtor in the bankruptcy courts.
Counselor Garcia, excuse me. I encounter probably 5 or 6 individuals every month that are facing foreclosure that file for bankruptcy. Do you have any intuitive feel what percentage of these people filing for bankruptcy to stop a foreclosure are ultimately successful by that maneuver?
Good question, Wilbur.
It's a great one, Doctor. And I'll give you my perspective. If all those 5 file, from what I've seen, maybe 2 of them will actually meet the requirements of the bankruptcy court to be afforded the protection. Again, different code, different requirements, but most of the time you file to stop the foreclosure, that doesn't give you lifetime protection, as you well know. And for the rest of the class, you, the debtor, would then have to provide information that the bankruptcy court needs to then say, okay, I can offer you this level of protection, a 5-year payment plan if you're Chapter 13. You have some homework to do. Yeah, you effectively stopped a foreclosure, but it doesn't stop there. Then the work, the onus is on that debtor to provide all the information needed to maintain the protection. A lot of times I see these cases dismissed for lack of providing information. Very common.
Thank you.
If I could, you know, because I do a lot of subject to deals, and I talk about this quite a bit in my class, I see a lot of people that are afraid, don't understand the bankruptcy piece of it, and don't realize that a lot of those people are going to fail and they're going to be back looking for a solution again. So if you're in that business of helping people buying pre-foreclosures, doing sub-2 deals, don't burn the bridges with those folks that are filing the bankruptcy. Just know that it's a matter of time. You know, a lot of those people are going to fail that bankruptcy. They're not going to provide the data the attorney asked for to move the bankruptcy protection ahead, and they're going to be back on the chopping block again. And as soon as they do fail, then the mortgage company, they go after them like a dog with a bone at that point, right, Martin?
I'd agree with that, Tim.
So keep good relations with those sellers, because you want to follow up with them to see if they were successful or not.
Yep.
Wilbur, did you have another question?
No, sir. Thank you. Well addressed.
Hey, Martin.
Yes.
Yeah, on those bankruptcies, there is a certain, when a person files a bankruptcy and then to discharge, there is a certain period of time that they have to wait before they can file again, depending on what type of bankruptcy it is. So that's why, as you said, you need to talk to a bankruptcy attorney.
That's right. That's right. There are different timelines and requirements for refiling, certainly, because then, like the doctor's scenario earlier, all right, stop the May sale. Oh, okay, I can just log in and do this for the June 2nd sale. No, that's not the case. So absolutely, that's why, you know, I, like you all on this call, build my team too, and have a bankruptcy attorney on my side for when my private money lender clients and lenders face that bankruptcy scenario. You bet. All right, we'll get on to the actual sale and then conclude. And if there are any questions, then we'll address at that time. Like I mentioned earlier, back to the steps. I'm actually selling. These are the requirements. If you've done it before, it's interesting, especially being a private trustee. It's a lot different than seeing all the foreclosure companies setting up their tents as if they're running the sale. If you haven't been to a sale yet and you walk up, be careful what you sign up for. A lot of those companies will tell you, oh, hey, are you here to buy? Oh, yeah. And you're effectively signing their application to be part of their sale. So a lot of different dynamics in the first Tuesday sales. But I'm a private trustee. I can walk up straight to the steps, go find the person appointed to know which trustees did arrive, tell them who I am, tell them what I'm selling. That list is important because then I know that the county not only has proper notice of all of my bullet points at the beginning, especially the notice of sale, but is expecting me to. Go up to the steps after you've checked in, if you will, and announce that you are conducting the sale. You announce yourself as a trustee, recite your terms of the sale on behalf of the trustee, let everyone know what the debt is, and that'll be your starting bid, right? Tell everyone what you're selling the property subject to. One of the main points is any statutory or court-ordered restraint. We talked about the main one, bankruptcy. Guys, what if there's pending litigation that's out of the federal bankruptcy courts, that's in just the district courts? Several people on the call have talked about, do your diligence, know what the state of title is, because guess what? If the property is subject to pending litigation, that property I can still sell, right? And then you, the title holder, will probably have an issue with possession at that time. Receiverships, right? Receiverships almost have similar type of bankruptcy protections. And receiverships, those of you that haven't heard of them, the courts will place the asset, the property, in the hands of a receiver to effectuate the sale, to handle the signing of the contract, the sending of the contract to title, the closing, receiving the funds on the back end. If there's a known receivership in a divorce scenario, I'm halted from any of the steps we've gone over. Let's talk death and initiation of probate proceeding. That's another legal proceeding pending litigation. Reinstatements or payoffs, I would suggest, I'm at the steps by then, you know where the debt stands with respect to the lender. There's a reinstatement, and when it expires, what the actual payoff amount of the loan is. And any matter which may affect the validity of any element of the foreclosure process. Why I say that is, you know, some folks might lawyer up on the other end and will try to pick apart every element that we've glossed over today and say, hey, you didn't follow this step. Hey, I don't think this posting was there for 21 days. That's a simple one, but you get where I'm going with it. Every step of the process must be buttoned up. You then also announce, and I'd like to put these on all of my deeds, I'm talking warranty deeds now, that the property is going to be sold as is, present condition, subject to any taxes. That's part of your diligence there, for current and prior years. A trustee's deed is prepared. I have that in my back pocket ready in case someone tenders a check and wants to buy the property from me at the steps right there. There's usually a notary available as well. After you go through all of that, or I do, then you start asking for bidders. Then you open it up. Who wants to bid at this sale? Who wants to compete? I usually don't run a registration because when folks start circling around me, and anywhere from 5 folks, 10 folks, 20 folks, if they didn't hear me at the beginning, they'll say, which trustee are you? Which property? And they'll have their list. They're ready, and they know what they would like to bid, if any, on the property.
Martin, do I need to move the presentation at all?
No, not at this time. I'm just going straight, and I don't think I sent you my actual transcript, but that's what I'm going through right now. I'm done with those bullet points. You can send that to everyone, and all the bullet points are expanded on everything we talked about today. So then I go into the facts of the subject property. I'd say on or about what day the debtors being foreclosed acquired the property. They executed a note in the deed of trust. That deed of trust was filed in the real property records of whatever county, and they appear in document number X or instrument number Y, covering the property known as, and I announce the property address. I then tell the participants that default in the payment and performance of the obligation pursuant to the note. All right. And I have been requested as trustee under the deed of trust to conduct the sale. Then I open the sale for bids. And I announce that, and we'll stop here for a little bit, the lender has authorized me to open the bids at Y. What goes into that Y figure right there? Anything and everything that can be secured under the deed of trust. And that's why I always say, read the terms of the deed of trust. What can be secured? Not just the principal amount, not just the delinquent amount, not just my attorney's fees. Ask yourself, does the deed of trust require that property taxes and insurance be kept up? Insurance is a big one there too. There might be a default there. So the lenders and I typically have, 15, 20-minute conversation and coming up with the starting bid. And then I still get this question, fair question. Lenders say, well, do I have to have a cashier's check ready for that amount? No, that's a credit bid on behalf of the lender. You're owed that, so you're allowed to open up the sale with that bid. So we really like to hone in on that number. If I don't get any bids, guys, I take the property back for that number. And that's the number that I use on my trustee's deed and make the grantee the lender that I'm there on behalf of. So that's when I take the highest bid, usually leave it open for several minutes. People make phone calls. This is real life and real talk now. People call partners, people call their funders. And I usually, again, leave it open for a little bit, let people make their calls before taking it back. And then I'll conclude the sale. I'll take the trustee's deed, again, down to the basement in Tarrant County or to the county clerk, whatever jurisdiction you may be in, file the deed, and get title back to the property on behalf of your lender. Not done yet there, right? Then there's possession, but we've talked about that. I just wanted to conclude, and again, it would have been nice to do an actual sale, but maybe one of these days we can get a group from Tim's REI club out at one of the first Tuesday sales so we can see it in action. And whether you're buying or not, I suggest if it's your first time going, you don't be a buyer, because then you can start differentiating between smart buying and the people that are out there spending too much and a lot of the unknowns. I'd be happy to go up there with the group, spend the 10 o'clock to 11 o'clock hour observing some private trustee sales that I handle and looking at some of the bigger companies online that sell on behalf of lenders and other institutions. So
that's an idea, Martin.
Yep. I'll open it up for a couple more questions before we conclude, but thanks for your time, guys. Again, look forward to seeing you all face-to-face sometime soon. Hope you're well, be safe. Look forward to some good questions to finish up.
I have a question. Sometimes I see an appointment of substitute trustee filed. Is that an indicator that a foreclosure is about to occur?
It's a pretty strong indicator. It's not a definitive one, but it's pretty strong, because why would a lender, and other people can chime in too, why would a lender substitute the trustee? All right, let's go back to the note's inception when the debtor borrower signs the note in the deed of trust. The lender is going to appoint a trustee, right? The attorney's office will appoint the office itself or another private trustee to enforce the deed of trust should you have to later down the road. So back to your question, why would someone substitute? Well, let's start with the easy answer. Maybe you're a private money lender and you lent, you didn't know who a trustee was that was appointed. And now you want another attorney to do so. The lender has the ability to execute and file an appointment of substitute trustee, and that effectively tells everyone and puts everyone on notice that I, lender, have appointed this person or this group of people, have given them the ability to foreclose on my behalf. Timing requirements aren't as strict there, so long as it's done around the time that you're posting and before the sale, then that new trustee can go up to the steps on the lender's behalf.
Okay, thank you so much.
Mm-hmm.
Oh, I guess I have another one if nobody else have a question.
Surprise, surprise, Lexi.
Okay, this will be hopefully my last one.
That's okay.
Do you serve at Martin? Do you serve as a trustee like on tax lien foreclosures, home equities, or reverse mortgage foreclosures?
None.
Okay.
Yeah. None. I don't serve as trustee on tax sales, home equity, and reverse mortgage sales are part of the basis of the combination, Tim. You said earlier, well, what's that combination? So if the trustee of a home equity loan or a reverse mortgage loan is initiating foreclosure proceedings, you have to start on the judicial route, right? Home equities are known as 50A6 loans. That's the provision of the Texas Constitution that governs not only the issuance of said home equity loan, but the enforcement of enforcing the debt. So it's a combination, because if you're going to foreclose as a trustee of a home equity or a reverse mortgage, you have to initiate court proceedings and you have to go get a judgment. Then when it's time to enforce the judgment is when you can follow the non-judicial timeline that we've gone over today. So that's why it's a combination.
Okay, that's the common. And so like Propel Financial and all of these lending institutions for tax loans that assume tax liens, those need trustees as well, right? Those loan companies?
Yeah.
Okay. And okay, so got you.
And those have to have, the folks who step in the shoes of government liens, tax liens, have a different set of requirements as well.
They don't follow 586.
Those 586 of which code?
For Propel and all the tax lien companies,
Mm-hmm.
borrowing companies, they follow a different foreclosure code, I guess.
No, it's the same. It's a similar process. What I meant by other requirements is I don't act as a trustee for tax loans or someone who has stepped in the shoes of the government and paid someone's taxes and gotten in return received the benefits of the tax lien, because there's other requirements and agreements that you must have with the county and the jurisdictions that are actually issuing the tax liens. Propel, the folks that you've mentioned.
Okay, wonderful. Thank you.
Mm-hmm.
Martin, I have a question.
Sure.
So this was asked to me yesterday when I was making some phone calls, and somebody was wanting to know how the late payments and everything that are happening right now with all of the stuff going on, how that's going to be handled by the credit bureau. Do you know anything about that?
I don't. I wish Amy was here. She she deals directly with credit bureaus as a loan servicer. I don't deal directly with credit bureaus. Ruth Ann might have something else to say there. So it is something that I, as a consumer as well, I'm curious of how credit bureaus are going to treat potential first-time home buyers, folks in forbearance or deferment. I don't know the answer.
Martin, this is Ruth Ann. I think they're going to have to do exactly what they do with bankruptcy. Once you file bankruptcy, your late payments stop reporting. Any payments stop reporting. So if you're in the bankruptcy process for a couple of years and you think it's over and you've done your Chapter 7 and everything's been forgiven, you have to go back and tell the mortgage company they're released to start reporting again if you didn't give up that house. So the forbearance, I'm sure, will be blocked. I've already started seeing on credit reports affected by natural disaster. I saw one recently where I thought it was about COVID-19, but I saw one yesterday that that was reported a year or two ago. So they must have lived in another area that at that time, I don't know, but it wasn't something that was added on. It was before COVID-19, basically. The line of credit that was affected was being reported like last fall. So that's what they do. They have the right during a natural disaster or during bankruptcy to have the reports no longer be shown on their report.
So Ruth Ann or Martin, when a buyer misses their first payment, how quickly do we know how quickly the mortgage company files that late payment on their credit? And is it going to happen before the forbearance? I mean, if the reason you won't refinance, Ruth Ann, is because you see a forbearance notice, or do you see that first late payment before they go agree to the forbearance?
There's no late payment. It's already, I just looked at one. It's already on the person that tried to refinance and didn't tell me they were in forbearance. The last payment showed February.
Okay.
But if they're late on their mortgage, it's reported after they're 30 days late. So if they didn't pay April's payment, they are reported today or yesterday, 30 days late on the payment.
Is that automatic? Does that happen routinely with all lenders?
Yes, absolutely. Soon as they hit 30 days late, it gets reported.
So
I can't do a refinance if they've had more than one 30-day late in 12 months.
And for all the folks on this call, that's important to understand when you start talking to sellers about their situation, if they're going to be in that default mode, and they think their credit hasn't been impacted and stuff, you just need to understand the timeline and stuff when you're talking to them, and make sure that the sellers understand what the normal process is. They might think their credit's good, but they just haven't seen the ding on their credit for that late payment. And there's a lot of people out there that are going to want to try and prevent dinging their credit, which those are the ones you really want, because they typically, in my experience, are much more motivated if they want to protect their credit than the ones that have missed, been late for a year or two or more. So. Any other questions for Martin, or any other comments, Martin?
Yeah, so that looked to be a lot of other questions. I'll leave mine.
Hey, Martin, I did have a question real quick. So seeing how we're headed into where more and more likely people doing on the owner financing, creative financing strategy going forward for investors, is there any different or anything we need to watch out for if we did have a wraparound mortgage, let's say on a property we owned or that we sold, if we had to go through the foreclosure process? Or is it basically the same thing as what you outlined here today?
Yeah, it's substantially the same as what I outlined here, depending on on which one of the notes in the wraparound scenario is the one foreclosing, then you either have notice requirements for a superior or yeah, substantially the same for the wrap mortgage that's going to be initiating foreclosure proceedings. It's back to you'll buy it subject to any prior liens, especially if they have priority. And that's where the diligence comes in, making sure that what the state of title is before a wrap mortgage is foreclosed.
Okay.
And then you also have to keep in mind, you know, owner occupant and what are the terms of the loan of the wrap mortgage that you're attempting to foreclose and why.
And that's as far as I mean, we handled that, or actually our RMLO will make sure that we stay in line with those, right?
Yeah, that's right. Good point. We're exactly where I was going.
Okay. And you know, just the just kind of a ballpark. What are as far as pricing and hiring the attorney? Just on a ballpark, what are we looking at for going from the first, second notice all the way through, let's say, through the actual foreclosure?
Yeah. This county here, Terrence, and some very close to downtown, those start at $1,500 for all 3 points.
Okay.
From demand phase all the way to me going to the steps.
All right.
Those 3 right there. That does not include the suit for forcible detainer if I need to go get possession for my clients too.
All right. Appreciate the information.
Absolutely. Thanks for the questions.
Martin, how much lead time do you need to go file, to prepare and go file?
At least a consult or 2. I want all the documents. You guys probably already knew that. I want all the documents. I want to have a conversation. I'm not going to say I'm going to research the title up front, but it'd be a good idea if the lender wanted to add that to it. But lead time, at least a couple consults before I'll come up with a game plan once I know enough of the facts. By consult, a couple phone conversations.
Okay. So since everybody else fell asleep at the wheel here, sitting where you sit, doing what you do, any thoughts on, or what is your thoughts on what the market is about to do with regarding pre-foreclosures, you know, and all the unemployment rates and the deferred payments and evictions and foreclosures? What do you think is going to happen here in the near future?
I'll start with locally. We've been shelter in place or affected by COVID-19 for maybe 7 weeks. If we want to round it out, let's just say 2 months.
Yeah.
From what I've seen and talking to either other title agency owners or the investors that I typically work with and seeing patterns, I didn't see that much of a slowdown. It might be my opinion and a product of what I've been a part of the past couple months. Why I don't foresee that much of a slowdown? Yes, did people stop buying and pump the brakes, and lenders? Ryan chime in. Lenders pump the brakes for a little bit. Yeah, I did see that. But when I mean a little bit, I say in the past 2 months, maybe 2 to 3 weeks, I did see a dip in orders. Of course, this was all the words that we keep hearing: unprecedented, something that folks had never encountered. So folks didn't know how to handle it for that small period of time. But did most of the investors and/or agents, realtors, you name it, that I typically transact with, stop buying or stop finding a way to buy? That maybe pause for that 2 or 3 week period. And I feel confident and comfortable in the real estate market locally coming out of this okay. To your point on loan mods and forbearances, I think we covered a little bit of that with what Ruth Ann and I were talking about. And when I brought up loan mods that are either being closed and paid off or being taken subject to from the last recession, I think those are going to be prevalent, and keep finding the deals. I believe that we'll see a influx of assets that people on this call can acquire if you're an investor in the next 2 or 3 years. These types of forbearance and or modifications, which will then create closings for us, which mean acquisitions for you guys for quite some time. That's what I'm seeing, and some of my underwriters can back that up as well.
Just to go on to what Martin was saying, yeah, we actually are seeing increase in activity because people are able to buy. All of a sudden, it's a buyer's market. We had 4 or 5 years straight of seller's market, and now buyers are having a little bit, prices have kind of stagnated or gone down a bit. So the deals are a little bit juicier for the investors. So we've seen an increase in traffic, but also a lot of hard money lenders have gotten out of the game. We have a lot of large hard money lenders that are based in the area. Sherman Bridge, Investmark, Bay Mountain Capital has reduced theirs. But Sherman Bridge and Investmark have completely stopped. Easy Street Lending has completely stopped lending. And part of it is because some of those are not 100% direct lenders. They do have their own funds, but they also are reliant heavily on other larger funds that they pull from that have pulled back. Luckily, we are a private group with individual investors, so we haven't had to do that. But yeah, there's a lot of lenders out there that have tightened up just out of fear, but there's still a lot of deals to be had. And so people are out there hustling and finding different ways to make those deals work.
That's right. Good point. And what I was saying earlier, Tim, the folks that did stop were stopping because of the facts that Ryan just suggested. And some of the ones that did stop that I've encountered or I talk with regularly, they'll say, hey, we're buying again. So not to say everyone's on the same timeline on offering up funds to hard money or other institutions, but great points there.
So, from my perspective, since I really love the subject to strategy, I just been trying to get my arms around what is going to happen if this work from home, or even just going back in phases, what that's going to do to all the families that maybe were struggling before COVID-19 hit, and now they're laid off or lost their job or their business is closed down altogether, but they still have a mortgage to pay. And, they may or may not have received their PPP loans or their small business loans to make that mortgage payment. And even if they receive the $1,200 plus $500 per child, that they're going to quickly find out that's not going to put food on the table and pay the mortgage payment, the car payment, and everything else in between. I'm just wondering what that impact is going to be. And I suspect we're going to see a huge number of, pre-foreclosure type deals. And, that's what I'm preparing for. And of course, I like those kind of deals. That's kind of how I built my business. So it's just ironic this is happening the way it is. But Joe Boston and I are working on setting up another subject to class to be done in the near future. And we'll probably have some real live scenarios of what's going on with the market now to be able to present in the class. So watch for that notice, watch for that announcement on the calendar. Martin, I probably need to speak with you if you're available and want to participate in that, as part of that class. And then not sure if it's going to be a virtual type event or physical, depends on how things go in here in the near future. But anyhow, I'm excited. I feel sorry for the folks that are going through all this. I mean, we all are, right? This shows no favoritism to anyone. out there. So I just think that we're all going to be real busy, or could be, with helping families prevent foreclosure on their credit and losing a home. Anybody else have an opinion on that? Different angle, different viewpoint of it? I know I've spoken to a couple realtors about this, and you know, the retail market's still booming. I'm closing on my last rehab on Monday. Glad it's going to be done, but you know, the retail market is still doing well because there's not a lot of inventory out there to select from. But I just think that the number of pre-foreclosures, the people, it's going to be delayed, I believe, by a few months. But I think there's going to be a big wave of subject to type opportunities. Anybody
Yeah, I
else
agree with you,
not
Tim.
being ready for that?
Yeah, I
Anybody
agree
else
with you. I
not
think that's
riding
where we're
that wave?
headed in the long term. You know, over the next 6 months, let's say, we're going to start seeing when we get into the economic crisis of this whole thing, which is going to be the worst part. And, you know, using creative financing strategies, you know, buying subject to, you know, wrapping it out is going to be one of the techniques that, you know, that we're going to really need to really be skilled at. But I think there's a great opportunity for investors.
I agree. I tell this story once in a while. I heard this many years ago, but there was a guru that made the comment that investors are oftentimes called vultures because they take advantage of people. But if you think about what vultures do, somebody has to come along and clean up all the carcasses along the roadside, right?
Absolutely.
Isn't
And so
that
making
what
that point,
investors
I
do?
would say that this is a great opportunity to help folks out, like you were saying, you know, absolutely.
This is what we do if we're prepared for it, right? But you have to be of the helping mode and not taking advantage of people, but you have to offer solutions that's going to help their particular situation. So I think it is a huge opportunity. I don't know how big the wave is going to be, but I think it's going to be big. And I think that there a lot of people on this call, we can work together and make a lot of money together and help a ton of people.
Absolutely. Absolutely.
Any other viewpoints out there besides mine?
Yes, and back to what you were saying, instead of looking at it as a vulture standpoint, I think we're problem solvers. Investors are problem solvers, and we offer solution to bad situations that they probably wouldn't have we not approached them or they not contact us. So I never look at myself or as a vulture at all. I'm a problem solver.
Yeah, no, and I agree with that, Lexi. It was just one way to look at it on what vultures do. I mean, they help, they clean things up, right? And that's what investors do. And we are problem solvers. We need to provide solutions that are custom to their particular scenarios. I didn't mean to have it come across like that, but you know, the end result is we help people and clean things up and try and prevent them from ever hitting their credit, try and prevent them from ever going to the courthouse steps.
Oh, exactly. Yeah, because vultures clean up stuff that's dead, and we're resuscitating and keeping them alive. So, all right, I'm done.
You know, the other thing too, Tim, is, and I just joined the group yesterday, so I'm new, you know, getting to know everybody. But I think another key part in the business for us going forward, and I think that's for everybody, not just investors, is learning how to operate virtually. Because with this virus thing, you know, they're saying you're going to see resurgence and so forth going forward. And so I think that's another key thing I've been focused on, is getting, you know, things in place for that.
Yep, I agree. Okay, Martin, any closing comments?
No, not on my end. Thanks again, everyone, for the words and the time and the interactiveness, the great questions. This is a solid group. And like I said at the beginning, I was excited to see so many folks that are either currently under contract with my office or have closed a deal recently. Keep going. Talking to an investor that was in my office 4 times for closings this past week. And he has a selfless attitude like a lot of folks in this group and wants to help folks like us and you on this call, I guess, get past the distractions and get past the reality of what COVID-19 has, how it's impacted us. And I heard earlier the economic impact, whether we've seen it or not. I too echo the sentiments of a lot of people on this call and think that there are going to continue to be opportunities for us all. Don't get discouraged and continue investing in your dedication to real estate and investing. I think we can all continue having fun. So again, appreciate the time. And thanks as always, Tim, for creating this platform and for having me.
Yes, sir. Thank you, Martin. Okay, let me bring my PowerPoint back up so I can wrap up my admin notes, and then we'll move on. We'll be done. Okay, can you see the PowerPoint? Upcoming events? Yes? Okay, so we had a couple events because of COVID-19. We had a couple things that were in works and now are on hold, I think. More to follow on this. Watch your group calendar to see the date changes and stuff and whether it's going to switch over to a virtual meeting or change altogether. I just don't know yet. We'll be keeping you posted there. This 16 May was supposed to be my subject to workshop. I'm talking with Joe this afternoon when we hang up here as to whether or not we're still going to do that, if we're going to do it virtually or wait entirely for a couple of months until things settle down. I don't know yet, but again, watch the calendar. The 21st is our Lunch and Learn Connect. We've turned those lunch meetings into a virtual meeting. We'll keep doing that for a little bit longer. Again, pay close attention to it. It'll tell you if it's an online meeting only or a physical meeting. And then 6th June, Joe Boston's going to be doing a reverse close program at the group. Again, whether it's physical or virtual, that'll all be in the calendar, so just look for those details to follow. 11 July was another one that Equity Trust was coming in and going to do an all-day workshop between the 11th and the 25th. Again, don't know yet if that's going to be a physical meeting. We're actually doing that as a joint effort with Robin Carragher's group, so we're going to have a good opportunity there to expand your networking and building that buyers list. And then my buddy Connor Steinbrook, he's going to be coming to us on the 1st of August and talk to us about social media and how to use video for branding and expanding your business. So that'll be a very interesting class. So watch for details on that. Okay, this month, for those of you that haven't seen it, we have an Action Taker special for the non-members in the group. We're calling it the COVID-19 50% off membership offer. We have never offered 50% off ever, but everybody's offering discounts, everybody's contributing, and this is ours to our membership, offering the 50% off on the membership. So what that amounts to is $90 for 12 months. That's 50% or saving $90. That's for 1 year, okay? This is only available during the stay-at-home order, which technically expired yesterday, right? We were back to work yesterday. So it's your lucky day. I haven't taken it off the site. And what I wanted to show you though was what's the real cost of this? You know, if you're only paying $90 for a year, and then if you attend the meeting every month, you earn $5 credit to your account. So that actually brings it down to, takes off $60. So now you're only paying $30 at the end of the year, which is a total of $2.50 a month that you pay as a member of the group. Now, I hope that you feel that your career and your real estate investing business is worth more than $2.50. So this is a huge opportunity for you to become a member of the group. And then if you decide that you want to pay that whopping $2.50 a month, you come in here and here's all the benefits that you receive. Now, there was more than $2.50 worth of data today and details and content that Martin presented. Now, I hope that you feel that way, but take that, combine it with all these other benefits in here, and you have a huge, huge opportunity here for that $2.50 a month. So I'm not going to go through all this, the membership benefits, but go through and look at this stuff and see if it's worth your time. Okay. So when you come back here, you can click this link in the presentation to get started. And I'll show you another way to get there. Here's some of the services that I offer: hourly real flow consulting, mentoring, deal consulting. If you want to do joint venture deals with me, you simply click on this link here and submit your property, and then we'll reach out to you and talk to you about that and how we work together on it. Here's some of the new benefits we mentioned earlier with Real Estate IQ, the deal analysis suite, where you get your 6 months free of MLS comps. And here's the link for you to go do that. Okay, but you get that in your welcome email when you join the group as a member. 6 months free of comps to help you analyze your deals and making your offers. So that's definitely a cool opportunity and worth a fortune, but you get it for free as a member of the group. And then here's the upgrade offer that Rodney mentioned earlier with the premium service. So make sure you use the code right here to go get that upgraded service. Here's the offer though: 50% off to become a member, $90 for 12 months. I'm going to take it off the group site tonight at midnight. All you have to do is click this link, or you can go, well, this link will take you right to the offer, except it didn't, so disregard. Let me show you where to go. My link is bad. If you come right here to the join under membership info and join right here, back to that membership benefits page and scroll all the way to the bottom below this membership list, below this pricing, come right here where it says COVID-19 membership offer for $90. Just click on that and follow the steps, and it'll take you right to the subscription page, and you can sign up there. $90, guys, for the next 12 months. What a sweet deal for you. So, and what that gets you is, in just as a quick summary, it gets you on all these calls. All the physical meetings are included every month. You get an investor website. You get the 6 months comps. You have access to all of our future meetings. We get upload all of the content from these meetings, go into your group membership area and stay there for 6 months. You get audio, video, the PowerPoint presentations, all that's accessible to you for the next 6 months. Not to mention we have all the content and the forms and stuff that we put on the site for the members. All that stuff is a part of this $2.50 a month. You'll never see this offer again. So go check it out. Call if you have any questions on it, but hopefully you'll take advantage of that. Without any further comments, oh, I'm sorry, I missed one last thing. The Real Flow offer, I'll let you go look at this, but if you're looking to systemize your business and have a tool that you can ramp up your business and control it and expand it, this is the tool for you. You have two options. You can go try this 60-day free trial here, right here, or if you know what you want and you watch this video overview and you want to go do this, you can subscribe for 12 months here. You can't combine these two offers together. So go check them out. Go watch the overview video. I'm going to be teaching RealFlow classes here shortly, and we're going to do those online here now that we have Zoom set up. And the other special part of this is if you do the 1-year subscription right now, RealFlow is allowing us to have a minimum of 2 of their best courses. But right now, depending on when you subscribe, we may be able to get you all 6 of the courses that they have. And they are fantastic. So if you act now, you might be able to take advantage of those 6 courses, but you'll get at least the private money lending course and the Facebook marketing course as part of that annual subscription. Okay. Again, if you have any questions, reach out to us and be happy to help you. And that's all I have. So thanks for attending. Go buy a house and take care of all those folks out there. Thanks for attending the call today. Does anybody have any last minute parting questions or comments? Whether you put it on, get on the mic, unmute yourself, or put it in the chat. Anything at all?
Just a major thank you to Martin. Oh my gosh, that was great information.
Cool. Thank you very much.
Thanks,
It
Ruth
was
Ann.
good information, Martin. And just so you know, we had 38 people on this call at one point.
Yep, saw that.
So that's good numbers for a video conference.
Yep.
Yeah.
Now,
It
Mark,
is.
the information you provide to us is so valuable, and we appreciate your time immensely, and what you provide to the group. It's you can't put no dollar amount on it. It's so valuable. Thank you.
Thank you for that. Thanks as always for your questions. Appreciate the interactiveness.
Thank you, Lexi. So if everybody likes these meetings, please don't be afraid to go share it and tell others about it for the upcoming months. You know, the one thing you can do is, you know, for the new folks here, just make sure that you, I'm going to show you real quick. Make sure you come to the group calendar and check it out. I'm trying to find my browser here. Make sure you come back to the group page. If you're not already registered as a member, do that. But I'm trying to get back there. All of our events are posted right here on the calendar. And you know, you come to the group page, click right here on calendar of events. You know, you'll see the details. Here's today's meeting. You'll see the details down here for each event that's posted. You'll see some more things coming up in here. So let me ask this question. This is something that I haven't announced yet, but since we have quite a few on the call, I'm thinking about doing a Tim's Tuesday Tips Zoom call. We have anybody interested in that? Tim's Tuesday Tips. That'd be kind of like a reoccurring, like the investor lunch and learn is, but I'm thinking about Tim's Tuesday Tips and maybe have a 30 to 60 minute Zoom video call and just talk about tips and tricks. Probably be talking a lot about the upcoming potential in the future with subject to pre-foreclosures, but we can talk about pretty much anything. But what's everybody think about that? Like it, don't like it?
Love it.
If you do that, I'll end it with a Title Tuesday segment.
Hey, cool.
I'm a fan of alliteration, Tim. I appreciate that.
Yeah, I like that.
So you're just going to have to watch the calendar for the announcements, or your email. By the way, we have quite a few people that have indicated that the calendar announcements are going to their spam and junk folder. Please go check those frequently and get them, make sure it's added to your address book so that, and whitelisted, so that we can get in your inbox. And, you know, we try to create creative subject lines to catch your attention, to help you spot those emails, because I know we all get a million email, but it doesn't do us any good to have the good content if you're not seeing it because it's in your spam and junk folders. So please go check that, and you know, make sure you fix it. Call us if you need to, so that we can try and help. But we need to, we want to give you as much good content as we can, but you got to know it's coming. So, any other questions? Any other comments?
Carla had a question about a replay for the video.
Okay. The replay is going to be posted in the membership site. So if you've ever seen much of my marketing, you'll hear me say frequently, membership has its benefits. And in our case, now we're down to $2.50. That's, I should stop doing that. I am stopping it at midnight tonight, but membership has its benefits, and this is it. Part of that membership is you coming over here and signing into your past meeting files. And here's all the stuff that's in there from the last 6 months for you to download, listen to, play, PowerPoint presentations, and so forth. So that's part of your benefit. You come over here, you also have your My Downloads area. Remember I mentioned earlier that you have forms and stuff, that contracts. So that is all a part of your benefits of a member of this group. So all this stuff is available to you 24/7 to go download. You get that free website, you get the free comps. That's all part of your benefits. You have past meeting videos, you know, all that stuff is uploaded here for the members to go download. By the way, the last 2 months since COVID started, we've been doing free meetings like this, and we're going back to the paid meetings for the non-members. The members, these are all included, but now that we've learned how to use Zoom a little bit better and we've got it implemented, we're going to go back to actually the non-members. If you're not a paid member of the group, then these calls, these video meetings will be a paid event for you. And that'll be a part of the calendar when you come over here and click to register. So when you come in here, it's going to say register and it'll tell you how much it costs. So hopefully that answers the question. Is there any other questions that anybody has? Anybody at all? Okay. Well, if there's no more questions, I'm going to sign off. Thanks a lot for your time. Everybody stay safe. Be careful out there, but go buy houses. Just do it safely and help as many people as you can. Have a great day. Thank you very much for attending.
Take care. Thank you for everything.
You're welcome. Take care. Bye-bye.